Stick around to see exactly how I made this much money the past couple months day trading, literally the easiest system I've ever found. It is literally so easy that I can teach a brand new trader how to use it within one day. And just to prove that to you, that is exactly what I'm gonna do in this video. I'm going to break down my 3-step system so you understand how to use it, and then I'm going to show you how to use it in a backtesting session. After you have a full understanding of exactly how I trade, I'm going to give you a 7-day free trial into my live trading group so you can watch me trade the same exact tactics in the live markets. So make sure you hit subscribe and watch along to the end of the video. First things first is the system. There are only 3 parts to the system, which is volume, support resistance, and trend. Adding these 3 things together has helped me gain withdrawals and payouts just like these. Other students have paid thousands of dollars to get exactly what I'm teaching you here for free. So make sure you remove all distractions and listen to everything I'm about to say. So our very first topic is going to be trend. And even if you're a new trader, like I told you in the beginning of the video, I'm gonna make sure you understand this in a short couple minutes. Go to tradingview.com. And this is going to be the charting software you're going to use. And what we're looking at is a candlestick chart. Again, the only 2 assets I trade are NAS 100 and US 30. And so when you add any pairs to your account, to this TradingView account, have it only be NAS 100 and US 30 so you can trade exactly like me. Only time frames we're going to be using within this system are 5-minute time frame, 15-minute time frame, and hourly time frame. And for the very first step, trend, you're going to specifically go to hourly time frame. So every last one of these candlesticks means 1 hour of price action. First things first, we're going to go to an ultimate high within the markets, as you see here. This is an ultimate high. And then from this point, it is going to be very easy for you to understand trend, regardless of where you at in price action from this starting point. So what you'll do is you're going to add in a horizontal line up at the ultimate high. You're going to add a horizontal line at the low that's as close as it possibly can to that price action. And then from that point, we're going to go down the ladder and see what type of trend we're on. So from this current price period until we break below either this low or break above this high sitting up here in this instance, we're just going to say that we're in a bearish market. So more often than not, price is going to go in the direction of trend. And if this is bearish, then more often than not, we're going to be looking for sells when we go to lower time frame, okay? And as we see here, as soon as we break below lows, at that point, we can go ahead and add in our new structure points as price is just going to continue to fall. So we have our new low sitting down here, and your new lower high is going to be as close as it possibly can to our new low. And then this is our new structure. And we're simply going to do this over and over again until we get to the area where we're trading at for the day. Obviously, until you understand trend, you won't have to go so far back. You'll understand trend just by seeing where you're currently at. So right here, now, as soon as we broke above these highs here, we never closed above this lower high is what it's called sitting up here. Yeah, we broke above, but then we ended up closing back below. The big part of this candlestick is called a body. That is the open and close of this candle. As a matter of fact, let's go ahead and break down a candlestick before we move forward. So we're going to run through both candlesticks. This bullish candlestick, which just means it's in a buying environment, and this bearish red candlestick, which just means we're in a selling environment. So this is what it's telling you. We have different time frames, minute time frame, 5-minute time frame, 15-minute time frame, hourly time frame, 4-hour time frame, and so on and so forth. Those are letting us know the amount of price action during that set candlestick. So let's say, for instance, on this, we're sitting on the 15-minute time frame. Then this green candle is 15 minutes of price action, and of course this red candle is 15 minutes of price action. So sitting here on this green candle, we're going to run through the body and the wicks and have you understand exactly what's going on within this candle. So the body of the candlestick is this big fat part that you see, and the wicks of the candlestick are these skinny parts that you see on both ends of this candlestick. What this green candlestick is telling us is we opened up here, so price opened here. At some point, price traveled all the way down to this low, and at some point it traveled all the way up to this ultimate high, but then ended up closing at this top part up here, and that's why it is green. Because from open to close, we ended up closing at a higher point than that initial price. And now going to the bearish candlestick, the open is way up here at the top part of the body of this candlestick. At some point we created this high up here, then at some point we came all the way down, created the low, and then closed here at the bottom of this body. So this is a bearish candlestick showing selling momentum during this time period. Okay, and so price never closed above this high, and because it didn't, price went more often than not where price is going to go, which is in the direction of trend, and we'll just continue on with trend here. Okay, all the way until we create some type of retracement. Now we have a new low. And as you know now, our next new lower high is going to be as close to the new low as we possibly can, which is going to be here. And until price breaks above this lower high here, or breaks below this lower low here, we're simply just going to hold this structure and expect price to more often than not continue in the direction of trend. Look what happens here. As soon as we get this minor retracement, but we break below again and create bearish structure again. So this is trend. A very simplistic way to look at it. You simply go to hourly time frame, you go to an ultimate high, or you can go all the way down to an ultimate low, mark out your bumpers, and then from that point until we break those areas, you just understand what trend is for that current period of time. Okay, that's step number one. Step number two is going to be volume. As breakout traders, we only want to trade during periods of the most volume because regardless of bias, even though we have a trend bias as well, we can make sure that more often than not, we're going to be correct if we have volume on our side using very tight positions. And so step number two is making sure you trade during session open with the correlating pair every single day. So what I trade is US indices, NAS 100 and US 30. What NAS 100 is a data collection of the top 100 best performing United States companies, and US 30 is the same, except it's the top 30 best performing US companies as one data set. That's what I'm trading. So trying to trade during the highest period of volume is obviously going to be during the period where the most US participants are going to be trading, which is during New York Stock Exchange Open, which is 9:30 a.m. Eastern Standard Time. Okay, so now you know step one and two. Step number one is identifying a trend on the hourly time frame, and step number two is making sure we're trading during the period of the most volume, which in this instance is going to be US 30 and NAS 100 during New York Stock Exchange Open, which is 9:30 a.m. Eastern Standard Time. Now we're going to go into our third step, which is execution, which is going to be executing based off of support and resistance on the 5 and 15-minute time frame. Here we have our entry model, which is 5-minute and 15-minute support and resistance breakouts. So first we need to run through what support and resistance is. Support is always going to be your floor. And after we're done with showing you this, I am going to go to the actual market to show you exactly what this looks like on a candlestick chart. But support is an area where price came down and had a tough time pushing beyond that level, leaving a valid level of support sitting right here in its wake, which again, I'm going to show you guys an actual candlestick here soon. And then resistance is going to always be your ceiling. So support, floor, resistance, always ceiling. Just price traveled up to this point and there's something sitting right there that's not allowing for price to continue higher. That is a valid level of resistance, which again, we're going to show you on candlestick chart here soon. Okay, so this is the whole mechanics. Let's say price was bullish for the day. We have our trend bias. We're creating higher highs and higher lows. Price is pushing higher. And then we go down to 9:30 a.m. Eastern Standard Time and we start to see price range based off of that bias. Well, as soon as we break above our first resistance, we're going to go ahead and take that trade because we're trading with trend. And more often than not, price is going to go in the direction of trend. But if price were to break below lows instead, which is going against trend, we don't take the break below support at first. We're going to wait for new structure to form to confirm that it is going to retrace and not go the direction of trend. So this is what that looks like. The first break below, don't take the trade, wait for it to retrace. And then once we get a newfound support sitting down here, then we'll go ahead and take that sell off here, which again, I'll show you guys on the candlestick chart soon. And then going into sells, it's the same exact thing, but in reverse order. If we're creating lower highs and low lows, it's a bearish market. Price is continuing lower, and then it starts to range right before New York Stock Exchange Open. Once the market opens up and we break below our floor, which is our support, we're going to go ahead and take the trade. But if we didn't break below our floor and ended up breaking above the ceiling instead, even though price more often than not should be traveling lower, we're not going to take that first initial break above highs. That's what people call fake out. More than often than not, price is going to break above and then push directly back in the range. And then from that point, if price pushes back above highs, that's a good indication price is going to continue higher. So we'll go ahead and take that trade. Okay, that is all we're doing every single day, is finding that trend, going to the exact same time every day, and then executing based off of that bias. So let me go ahead and show you what that looks like on the actual charts. So step number one is going to that hourly time frame and figuring out what trend we're currently in. Well, here, as you can see, we're in a massive uptrend. Price is creating higher highs and higher lows, and we're definitely in bullish momentum, obviously, okay? And so when we go to lower time frames, when we go to that correct timing, we're only going to be looking for buys unless we get the extra confirmation. So let's go down to 5-minute time frame. Now we are on 5-minute time frame, and it is 5 minutes before session open, so it is 9:25 Eastern Standard Time. It's time for us to mark out our support resistance so we know exactly when to enter once that market does open. The key to marking out the correct support resistance is staying as close to current price as you possibly can. We don't want to look to the left at all. We already have our bias as to where we believe price is going to go, so we're looking from a breakout, again, as close to price as we possibly can. So right now, the most current high is here. Let's go ahead and mark this out. We had a high here, a low here, a high formed here, a low here, a high formed here, and then we started to push lower. And so our closest high is sitting up here. And then as far as a low, there is no low. Now, as soon as I remove this arrow, you'll see this lower wick already broke below the nearest low here. And so we're simply waiting for new structure to form. There's just no sell-off in order for us to take yet. We're waiting for some type of bullish candle to form to show us that there's something sitting right here that's not allowing for price to continue lower, and that is a valid support, and then we can go ahead and mark that out. So let's say that does happen. We go ahead and push lower and then get a couple bullish candles showing that there's support sitting right here. That doesn't mean that we're going to take the break once we break below those lows. Remember, because we're bullish, we're going to wait for a newfound support to be formed, and then we'll take the break back below those lows. That is for sales in this bullish market. But as far as buys go, if we were to break above this current high here, since we're bullish and more often than not price is going to go in the direction of the trend, we're going to go ahead and take that trade all day long. And it's going to be the same exact stop loss, and it's going to be the same exact TP every single trade. This is a mechanical view of the markets. Now, the reason why I use a 30-point stop loss on US 30 and NAS is more often than not, each individual candle during periods of volume is printing anywhere between 20 to 60 points of volume statistically. And so our stop loss is within about the middle of that range, just simply meaning that if price were to go against us in at least 30 points or more, it's a good indication that it's going to reverse. But if it goes 30 points within our direction, it's probably a good trade to hold on to for higher R to R. So let's get back into this example. As soon as price breaks above these highs, we will get into these buys, and there's no sells yet. Now market is open. We're waiting for a newfound support to form, some type of bullish candle. And here we have here, something sitting right here that is not allowing for price to continue lower. So this is a valid support. Now, if price breaks below these lows, we're still not going to take the trade. But now we're getting extra confirmation if we break below these first lows that potentially price is going to retrace for the day. Our very next candle, we do end up breaking below these lows. So now if we get that next support formed, as soon as you break below then that new low, we can accept price is probably going to go the opposite direction of the trend for the day. And we're going to hop on to with that volume for the day. But we don't have that support yet because that bullish volume candle hasn't formed. Very next candle. Okay, now we get that support candle formed. If we break below these lows, we can go ahead and take the sell. And then now as far as buys, we can go ahead and take the buy sitting all the way up here as soon as price pushes above. Okay, now price is climbing. We get our entry there. Again, it's going to be 30 points, which is going to be in alignment with volume for US 30 and NAS more often than not. And we're going to be chasing a 1 to 3. Okay, as soon as you get into markets, almost hit a stop loss there. And then price continues higher. And that's a full TP hit. As long as you have trend on your side, which is just having a bias before going down to lower time frames, and then trading during a period of volume and executing based off of that bias using support resistance, more often than not, by a heavy percentage, you're going to be correct. Okay, and that is the 3-step system. Even as a brand new trader, if you watch this video a couple times, I can almost guarantee you're going to understand exactly how I trade, as this is a mechanical system. It's rule-based. It's literally XYZ lines up, take the trade. XYZ doesn't line up, do not take the trade. Now, as promised to you guys in the beginning of this video, I'm going to give you a 7-day free trial to my live trade room. All you have to do is click the link down in the description. So if you guys enjoyed this education, make sure you like this video, comment down below what you would like to see next, and most importantly, subscribe to this channel, as I'm going to be giving you guys trading education, one video every single week at least. And I'm also going live Tuesdays and Thursdays, trading the same exact system that I taught you here today.